Hi, and welcome to the latest in Optimum TV's Thought Leaders series. I'm Stephen Adams, and today I'm turning the tables on Stephen Hansen, journalist and Director of Biopharma Intelligence at BioCentury. Hi, Stephen.
Hi, Stephen. It's nice to join you, and nice to join someone who spells their name correctly as well. So
Absolutely. There's only one way to do
there
so.
is only one way. You're absolutely
You've
right.
just published an in-depth article in BioCentury looking at how biotech markets have been performing so far in 2026 and looking ahead to the rest of the year. So it'd be fair to say, wouldn't it, that the first few months of 2026 were pretty positive. Talk me through that and talk me the major themes at play.
Sure. Yeah. No. Of course. So I would use the word positive in a relative sense. It's been positive in the sense that until yesterday, effectively the last day of the quarter, biotech was a couple percentage points underwater. But that was better than the rest of the market. So like the main markets were down pretty heavily on, a variety of things, whether it was, concerns about how AI is going to eat every sector, in the next 6 months, or whether there was, obviously we had the outbreak of a new Middle East conflict here that roiled markets, especially when we can come back to that later, how that affects things going forward. But biotech was sort of the one of the better performing sectors of the first quarter, and then yesterday it actually moved into the positive. So that was a good sign. But a lot of that is really on, when we think about sector specific things. There's a continued M&A trend. Again, that was part of what we saw yesterday. We saw 2 fairly sizable M&A takeouts, which are good, and that's just been a continued theme that we've been seeing since basically the second half of last year. And so when you add in the M&A theme continuing through, that recycles capital. And so we've seen some pretty good capital inflows into biotechs. And so that's been really positive. And, the other thing that I kind of, picked up on at the end of last year, and we saw this again continue through in the first quarter, was really, I think, some renewed interest from just beyond the specialist investors. So we saw quite a few follow-on deals getting upsized in the first quarter. And I mean, meaningfully upsized, like seeing deals that were adding, proposing 200 and raising 300, or proposing 400 and raising 650. And what that often signals, obviously, I don't have insight into actually who's in those books, but what that often signals is that you've got investors coming in who can write pretty sizable checks. And so, that might be more your generalist mutual fund type investors. So that's always good for the sector's momentum, I think.
Okay, so largely positive, although you alluded to it, and Q1, which we're at the end of right now, can be split into, well, we can't really call it 2 halves, but we can certainly call it 2/3 and 1/3 because of what kicked off on February 28th with hostilities in the Middle East. Right. But biotech stocks have proved pretty resilient so far, at least. Things are changing day by day. That's a big rider we need to put on this episode. Despite their reputation for being a little fragile when it comes to external shocks. Explain that to us. How come?
Sure. So this conflict, I think in particular, there's sort of 2 ways to look at it, I think. So one way is because it directly impacts the price of oil, which, underpins a lot of the, current global economy. If oil prices go up and stay up, that leads to increased inflation, and increased inflation then typically will lead to higher interest rates. So that's a higher cost of capital for companies. And, when we see interest rates go up, that tends to push investors out of equities and into, more fixed rate instruments. So that tends to be a place where you get a risk-off kind of environment. And so biotech tends to get hurt in those risk-off sort of scenarios. But another way of thinking about this, though, is that biotech, and biopharma and sort of therapeutics in general are also one of the least correlated to oil prices as far as sectors go. So, if you just think about it purely from a supply and demand sort of, scenario, regardless of what the price of oil is, people still need medicines. That doesn't really change. That dynamic doesn't change. And the ability to, run clinical trials and to manufacture drugs is largely independent of, the price of oil as well. And so from that respect, when you look at a generalist investor, if they're investing in a, company that makes fertilizer, they have a direct reliance on oil in order to be able to get the ammonia to be able to make fertilizer. Or if someone that is a logistics company or something where they need access to fuel, there are a lot of other sectors and industries that have a much closer tie into oil and how that influences their just ability to operate their business. Whereas I don't think that is true for biotech. And so in that sense, there are some investors that are kind of arguing, well, maybe biotech is a bit of a safe haven. But I don't think that will probably be true for all biotechs. I think probably small caps and, would still probably have a hard time. I think, if biotech were to be a safe haven, it would likely be, a flight to the larger name companies that have, greater liquidity, have a commercial profile, and that's probably where people would flee to. But again, as you mentioned, this is kind of a day by day thing. And, I think if there's resolution in the near term, things probably carry on as they were. It's the worry starts to be is that if this gets out into April, May, June or beyond, then who knows?
And in that scenario where we have a sort of a longer conflict in the Middle East, then I'm presuming you're going to get worse effects in terms of interest rates being pushed up, that having an impact on investor sentiment, and just the fact that there is a whole lot more uncertainty in the world is going to push people to a more risk-off position.
Yeah, that's right. And I mean, it's, the one scenario is you then, we return to a rising rate environment, which, historically has often been, bad for, as I said, sort of high risk assets like biotech. Or, the other sort of unknown here is we're going to have a new Fed chair coming in May, which we don't know who that will be. But the, current administration is very keen on lowering interest rates. And so is there the possibility that you could have someone come in who, regardless of what the economic indicators say, wants to lower rates? Does that push us to a situation where you have sort of a stagflation economy, where you have a recession combined with high inflation, which is a really bad mix? So there's a lot of unknowns here going forward. And so that's why, the way we're trying to sort of think about it is trying to map out a few possible scenarios. But like anything in life, there's probably about 1,000 sort of nuanced trails this could take in between. But, here's hoping cooler heads prevail at some point.
Absolutely. It's certainly not dull anyway.
That's true.
In a few weeks, you're chairing a panel on trends in European life science investment at the Anglonordic Life Science Conference in London, an event you've helped chair for 5 years or so now. So you must like it. What do you like about it?
Yeah, no, it's just I think the thing that I really enjoy about it is it's a good group of people. We've largely had the same group kind of on the panel for the last 5 years now. So in some ways, it started to become a bit of a reunion, I guess, where we just get together to talk about our expectations for financing and the markets in the next year. And I think what's great about all of them that are going to be on this panel, whether it's Hakan, Alan, Roel, Henrietta, or Lucy, they're all very experienced investors. They all have been in different markets and gone through different things, and so because of that, they're very sort of have quite a relaxed, I guess, feel when we all sit down to kind of chat about this stuff. And so honestly, I guess one of the reasons I like it most is because I only have to ask one or two questions and then they just take off and talk about a bunch of different subjects amongst themselves. So it's probably one of the easiest moderating gigs that I have throughout the year. That doesn't require a lot of preparation on my part. So that makes it quite enjoyable.
Always
as well.
like that. I can attest to that.
That's right.
That sounds super. Well, we look forward to it. It's only in 3 weeks or so time now, as we're recording right now.
It's coming fast.
Hansen, exactly. Director of Biopharma Intelligence at BioCentury. Thanks very much indeed.
Thank you, Stephen. Appreciate it.
Bye bye.